Welcome back to the channel. In today's video, we'll explore the fascinating history of the Forex market, from ancient barter systems to the trillion-dollar digital marketplace we know today. If you want to understand how the Forex market evolved, grab a coffee and stay with us. Section 1, Barter to Currency. The story of Forex begins thousands of years ago with barter. Ancient civilizations like the Mesopotamians and Egyptians exchanged goods and services directly, like grain for cattle. But bartering had its limits. Then came commodity money items like gold, silver, and even shells, which had intrinsic value. Eventually, governments began minting coins to standardize value, followed by paper money in China during the Tang dynasty. The Tang dynasty was a golden age in Chinese history, known for its political stability, cultural brilliance, and economic prosperity. Its capital, Chang'an, became a major center of trade and culture, with great achievements in poetry, art, and printing. The dynasty expanded China's influence through the Silk Road and promoted a merit-based civil service system. Despite its success, internal rebellions and warlordism led to its decline and eventual fall. This was the first major step toward a structured currency system. Section 2, the Gold Standard Era. By the 19th century, the global economy became more interconnected. Countries adopted the gold standard, a system where each currency was backed by gold. This created a fixed exchange rate mechanism. For example, if one British pound was equal to a fixed amount of gold, and the US dollar was also fixed to gold, then the GBP/USD rate was stable. This provided predictability in international trade. However, the system had its flaws. During economic crises or wars, countries often suspended the gold standard to print more money. Section 3, Bretton Woods Agreement. After World War II, the world needed a new financial system. Enter the Bretton Woods Agreement of 1944. 44 nations met in New Hampshire, USA, to design a stable global economic framework. They agreed that currencies would be pegged to the US dollar, and the dollar itself would be convertible to gold at $35 per ounce. This made the US dollar the world's reserve currency. Bretton Woods helped stabilize post-war economies, but as global trade grew, maintaining fixed exchange rates became difficult. Section 4, End of Bretton Woods and Free Float System. In 1971, U.S. President Richard Nixon shocked the world by suspending the dollar's convertibility to gold. This effectively ended the Bretton Woods system and led to the rise of the floating exchange rate system we use today. Now, currency values were determined by supply and demand in the open market, driven by trade flows, interest rates, political events, and speculation. This gave birth to the modern Forex market, a decentralized, highly dynamic environment where currencies could fluctuate freely. Section 5, the rise of electronic trading. In the 1990s and early 2000s, the Internet revolutionized Forex trading. Large institutions began trading electronically. Then came online brokers offering access to retail traders. Now, anyone with a computer and internet connection could trade currencies from anywhere in the world. Technological innovation also introduced automated trading, mobile apps, and AI-powered tools, further expanding accessibility and speed. Section 6, Today's Forex Market. Today, the Forex market is the largest financial market in the world, with over $7 trillion traded daily. It operates 24 hours a day, 5 days a week, across major financial hubs, London, New York, Tokyo, and Sydney. From central banks and hedge funds to individual retail traders, the Forex market connects economies, influences inflation, and impacts your everyday life more than you think. That's a wrap on the history of the Forex market. From ancient barter systems to advanced digital trading, it's been quite a journey. If you learned something new, hit the like button, subscribe, and drop a comment below what era of Forex history interests you the most. Thanks for watching, and remember, understanding the past is the key to mastering the future. See you in the next video.